Hi, my name is Pierre Corbin, and I'm the creator of the Great Reset films. This is episode 2 of the Great Reset News, where I look at the past news that happened, quite recently, and I just comment over it from the perspective of the Great Reset and Bitcoin and how it fits as a follow-up to, the topic of this channel, which is the Great Reset and the rise of Bitcoin. Now, this episode is 2 weeks after the first one. That's because I was traveling to the Miami Bitcoin conference, which was a pretty exciting conference. I actually did mostly work. I did a few interviews, 6 interviews, I believe, where I got to talk with Lynn Alden, with SALVADOR, among other people. All of this for the new documentary film that I'm working on, which is called The Fight for the US Dollar. If you don't know about it, you can go check out the trailer that is on this channel. It's called The Fight for the US Dollar official trailer. It's pretty exciting, and if you haven't seen it, please tell me what you think about it. So today we're here to talk about the news that happened in the past couple of weeks, and I think we should just get straight into it. So the first point that we have here is that the common currency on agenda for South African Brics Summit. So the Brics Summit happened, and we know that this has been on the agenda for a while now. We've even talked about it in the previous video, but now they're hinting at it even more because, as you can see, it actually was on the agenda for the Brics Summit. How are they going to create their currency, etc.? For now, I don't know if it matters that much. I mean, of course, it is important in the geopolitical space today, and these are the stronger nations that have been pushing in that direction. It's not like it's going to hurt the dollar in the short term. This is maybe a very long-term kind of play. But all of these nations, even though they're trying to build their own BRICS currency, they are themselves addicted to the US dollar. So it's not like the dollar is going anywhere. But it's interesting to see them do this push, especially that their GDP is really what is growing now. And we're going to look at a chart in a later post. So next up, the number of Bitcoin wallet addresses holding at least one Bitcoin has surpassed 1 million, with more than 200,000 whole coiners added in the last 18 months. Look, it's a bear market. The price of Bitcoin is low. If you're not stacking, then you're making a mistake. It's now is the time to reach the 1 Bitcoin. If this is your target, 0.1, 0.2, whatever your target is, now is the time. I mean, the price of Bitcoin is at a 60% discount from the all-time highs. It's not going to stay like this forever, just based on, past performance. I think it's great to see this. Strong Bitcoiners are there and they're stacking sats while they can. And that's what everyone is doing during this bear market. Then we have the West and China, right? So here we have it. The West committed to eliminate its 30% of global CO2 emissions by 2050. And we see what are the annual CO2 emissions, and here's the world. And what is the West out of this? The whole purpose of here is, you see, unless the West gets its decarbonization targets and deadlines in line with China and India, reducing CO2 is 100% risk and 0% reward. The point that he's making here is that our Western countries, the Western world, we are getting rid of our CO2 emissions, and for that we are lowering the amount of energy that we're producing. So far this strategy was working because we were just exporting so much of this industry. We're now realizing that, we can't go on with this inflationary system that pushes us to go for cheaper and therefore go abroad and deindustrialize our nations. The GDP of our nations is slowly changing and is being taken over by the BRICS countries. And if we don't start producing more of that energy and bringing more industry home, we're going to be in trouble. And that's just one of the indicators that represents that. It's great to lower our CO2 emissions, but at what cost? And we have to be careful how we do that. Otherwise, we're going to be completely overrun by the developing world. Then we've got new Bitcoin flips USD as preferred asset if the US defaults on debt, Bloomberg. Look, it makes sense. This is, of course, what we've been talking about for a long time. The Great Reset and the rise of Bitcoin talks about that. When things go bad, people need to find alternatives. And what's happening now, as opposed to previous cycles that we could have had, is the fact that the US dollar is directly the risk of the US dollar is directly correlated with the risk of the financial system, right? So people need to find some alternatives for that. And it makes sense that, you know, number one is gold, then we've got treasuries, of course, US treasuries. And after that comes Bitcoin, which is great to see it above dollar, above the yen, Swiss franc. You know, it means that Bitcoin is not seen as a fiat currency the way these currencies are seen. It's a harder currency that is more comparable to gold. We made the entire case for that in the documentary The Great Reset and the Rise of Bitcoin, which I recommend you watch if you haven't. But it's, you know, we're actually seeing it in numbers and in investor preference. Next up, Sam Altman, the CEO of OpenAI, is close to clinching $100 million in funding for a cryptocurrency project, WorldCoin, according to reports. So have you heard about WorldCoin? That's a crypto that was created by Sam Altman a couple of years ago, where they were giving out some free WorldCoin in exchange for scanning the retina of your eye, right? So they were basically buying, using free money, which was this WorldCoin that they created, they were buying the information of your retina. And it's the same guy, so the guy that created WorldCoin is the same guy that created OpenAI. And he is creating this crypto as a solution for a world that will need some kind of money, some crypto, according to him, in a world with AI. So he is basically creating, he's using OpenAI as a reason for funding his WorldCoin project, which is, of course, centralized crypto that is worth for nothing, and in fact holds in their database holds all of your retina information. So it's a pretty dangerous concept that I recommend anyone to read on about. But what's interesting is to see that he's you know, getting close to raising the $100 million that he's raising for that project, which you know, it's his name that allows him to do that, and it's his name that allows to raise these funds. I think it's a dangerous thing, and I hope that this fails, just as another example that, you know, Bitcoin, not crypto. Next up, Bitcoin transaction fees plummet after inscription hype. So we talked about it in the last video. There's been this inscription hype, which is led or started with this ordinals movement, which is to create NFTs that go directly onto the blockchain. Now, you know, it allows for anyone to create one transaction that will hold the amount of data of an image or whatever it is that anyone can add there in a particular field in this transaction. And this data can be the size of an entire block. So it means that what users can do is create a bunch of transactions that take up a lot of space. They pay high fees for that, of course. And it makes the rest of the whole Bitcoin blockchain fees skyrocket. And we see that that's what happened. And that's what was happening during when I made the last video, episode 1 of this show. And you see that since then, the hype has dropped big time, right? This was to be expected, obviously, that it's not something that was going to be sustainable because, you know, even for the people that are doing these meme transactions that are trying to break Bitcoin, whatever that means, it's unsustainable for them to just continue paying these high fees. They're just, you know, testing the network, basically. Yeah, it creates a lot of, you know, damage to the community, I suppose, or at least it creates a lot of polemic. I understand why. There's two sides of this story. I find it a shame that people are having this kind of fun, even nowadays. There's, you know, countries using Bitcoin, you know, poor people using it. It's more than just a meme coin, or so we think about it. Here they're kind of proving the opposite, which I think is a shame for Bitcoin in general, and you know, but at the same time it allows us to actually test the network. Of course, Bitcoin isn't breaking. It's not this that's going to break Bitcoin. If anything, it's just going to temporarily increase the Bitcoin transaction fees. Moving on, 20% of Bitcoin hash rate returned to China after 2021 ban. Now, that was the first drop during the 2021 bull market. The first drop that happened was because of this news. I remember it was right after my birthday. And we can see it here. Mainland China is right here. And after 2021, you see how like everything has dropped big time. It was down to 0% mining in China, or so we thought. Right after that, it picked up fairly quickly, and now we're back up above 20% of mining that comes from China. Bitcoin is unstoppable. Bitcoin can be banned, but it's, an open protocol. Anyone can run it from anywhere. This just proves it, that even if a country as authoritarian as China tries to ban Bitcoin, they just won't succeed. We have the proof right here. That's an interesting chart to observe the evolution of country share, and we see how it's changing. The bigger one, the one that has taken more control here, is Kazakhstan, I believe. No, it's the United States, exactly. So a lot of the miners, they had moved from China to the US, and this is where there was quite a big explosion of miners in Texas. And we see this has remained quite stable. Of course, they've also moved to Kazakhstan. Like you can see here, it's a quite high number of miners coming from Kazakhstan. Moving on, US Department of Justice is targeting crypto exchanges mixers, and that's the official kind of explanation here. And we know that we've been talking about it. There's this crackdown on crypto exchanges in the US, and we see it quite frankly. We've got some more news following about that, that we're going to get to in a second. Then we have auto delinquencies for millennials and Gen Z have exploded higher for 30 years, and younger blue line serious delinquency is at the highest level since about 2010. So auto loans by age, this is the one that we're interested in. It's the millennials. It's exploding, not only for them, of course, maybe this has had the sharper increase because they're the poorer out of all of these, right? The younger you are, the less money you make. So these delinquencies have really increased, and I think it's expected. We see the increases fairly comparable to, following the 2008 financial crisis, which is when, it led to the creation of Bitcoin. We're not quite at the same levels yet, but there's high chances we'll reach it simply because people struggle more. There's less, there's less money around, there's less jobs around. People struggle more to pay, therefore they will stop paying, and there will be an increase in delinquency. In this case, it's auto loans. It's also the case for any other type of loan, but in this case, I think the auto loan is maybe the easier one to track the millennials because obviously they have less homes than the rest of the generations. Full Bitcoin Rewards app announces expansion into El Salvador, spearheading Latin American operations. It's just interesting to see there's one other big company that is entering El Salvador, creating a company in, Bitcoin countries, and the Bitcoin country. It's, it's a bet that is working for El Salvador. There's foreign investment coming to a place where there would never be foreign investment. I think it's interesting to see. That's part of the reason why I set up a company there. And, especially now with the great tax incentives that El Salvador has created, if you're a tech company, and by that, I think it means just a blockchain company, an AI company, anything that really touches tech, well, then you can register in El Salvador and have 0% tax for your business. Just another one of these moves. The first one was to accept Bitcoin, to attract Bitcoin companies, now make 0% tax to just add this extra incentive. You can be a tech company accepting Bitcoin and run completely 0% taxes if you're based in El Salvador. Next up, the messaging from the Federal Reserve was that interest rates would remain low and that the inflation that was starting to bubble up would only be transitory. That's what the Silicon Valley Bank former CEO Greg Becker said. And so we can look at these headlines right now before commenting. Kashkari says Fed shouldn't overreact to temporary inflation, right? That was in November 2021. So they shouldn't overreact to temporary inflation, means that, what kind of reaction does inflation spark to central banks? It's to increase the interest rates, and so that's what the kind of how he was controlling the narrative. Then we have Fed's Kashkari says warnings of runaway inflation are just ghost stories. Same thing. That was in 2020. Same thing. It's just noise. You see, it's a lot of noise. It's not going to influence interest rates. Exclusive Fed's Kashkari opposed to rate hikes at least through 2023. Right. That was in June of 2021. And then September 2021 interview, Kashkari says he's rate hike holdout in thoughts, right? And that he prefers holding interest rates near zero into 2024. So why does it matter? And why would the SVB CEO say that? Former SVB CEO say that? The reason for it is that SVB, just like a bunch of other regional banks, got crushed because of the increase in interest rates. They took positions in what are considered the safe kind of positions for a bank or any kind of institution or investor, which is a government bond. And this is what they bought. But the moment the Fed started increasing interest rates, well, then this makes the price of the bonds drop, and they got pretty much stopped out. And that's what accelerated this fall for SVB, because the price of these bonds were dropping, their unrealized losses was increasing, and they were forced to sell out at a loss. And actually, these unrealized losses became realized losses. And this is what made them go bankrupt. The reason why they took on these positions is because they listened to the Fed and to guys like Kashkari that said that they're not going to increase the interest rate so severely, that they don't want to increase them at all. And following these indications, these banks took these positions, which are the safe ones, and they got crushed, which shows you just how illogical the market is, because you go for the safer option and you get crushed. Whereas other banks that have, maybe better risk management, like JP Morgan, much bigger banks than these regional banks that failed, they had less exposure to the long-term treasuries and higher exposure to the short-term treasuries that weren't as impacted by that, and these losses were smaller. So it's pretty interesting to see that. Of course, we all knew that the fact that SVB and these other banks failed is because of the Fed, because of how they're manipulating the interest rates and creating fake signals in the market. Now, this is coming back to the point that we briefly looked at earlier, which is the crackdown that the Department of Justice is doing on crypto companies. There's one more case we're going to see, but we have it here. The SEC says crypto rules may take years to set, and they're in no rush. Industry must challenge them in the courts all the way. Now, what's interesting with that is that, you see, they're creating they're doing this crackdown on the crypto environment. They're attacking some companies, including Binance being the most recent one from this week. But US regulators are attacking these companies, and they're suing them and so on. But there is no regulation around it. And the SEC that says that it may take years to set gives free space for these, the Department of Justice and other regulators to go and attack these companies, because if there's no regulation, then you can just pick your losers and your winners. And we know this doesn't end well, because FTX was a clear winner for the Democrats party, and it was very, we know how Sam Bankman-Fried was such a good friend of this guy, Gary Gensler, which is the head of the SEC. And we know how this ended, right? They picked their winners, but they had just way too much trust in these winners. And I think that's a problem, because obviously it allows for just the government to choose what they want, because there are no regulations. So, so far, the lack of crypto regulations was an interesting thing for crypto companies. And all of a sudden, the lack of regulations in the crypto world is interesting for US regulators, because it just gives them, a blank space to just sue the hell out of them and just arbitrarily set rules for a particular case, picking their winners and their losers. The FBI's investigation into alleged collusion between Russia and Donald Trump's 2016 presidential campaign was based on flimsy evidence and seriously flawed, an independent U.S. prosecutor said in a report. I think we talked about this in the last one. I think it's just important news because, again, in this Great Reset agenda, we know Klaus Schwab said very proudly that we have infiltrated many governments. I don't know, that's maybe not the best German accent, but this is what they've done. And there has been some clear manipulation as to the result of the 2016 elections that were based on just flawed information of Trump being, colluding with Russia. And the exact same thing was used as an argument for the 2020 election. And we also know that this was completely false, right? So there's just this message that has been put by the Democratic Party around Trump that he's colluding around Russia. And this was true for the 2016 presidential campaign, and it's true for the 2020 presidential campaign. It's just interesting to observe, you know. But it's again the people that support the Great Reset agenda that have been supporting this kind of narrative and trying to clash Trump because of his popularity. Just got to invent some stuff or manipulate some of the voting that happened. Next up, new U.S. consumer debt breaks 17 trillion for the first time ever, CNBC. So this is just, you know, U.S. consumers, so individuals, and the debt that they hold is at $17 trillion. It's a record, of course. This number, you know, there's been a lot of monetary inflation. So this number, you know, might be inflation adjusted comparable to previous levels. I did not check that data and that level of detail. But, you know, this is why we talk about it. It's just a system that is high on debt. Countries are high on debt. Governments are high on debt. The individuals within these countries are also going to be high on debt. It's just the way it is. And of course, you know, we're at new records in the US, $17 trillion of debt for the first time ever. Is it going to stop? I mean, I doubt it. Why would it stop? Again, we have an inflationary world. So there's more money needed constantly. And if you're, you know, a regular US individual, and this counts for pretty much any other nation, well, then you are getting screwed by this inflation and you're chasing, and it forces you to take on more debt. And literally, it's the thing to do. It's pretty sick. And I think this is just one of the symptoms of, you know, that shows how sick this is. Breaking, EU finance ministers have approved the world's first comprehensive cryptocurrency rules. Now, great, you know, there's some actual regulation happening. I guess it's good for the market, but look at this. All exchanges and wallet providers must be licensed. Okay, why would a wallet provider need to be licensed? You know, a wallet is just software. They don't hold any information. It's just an app that allows you to interface with the blockchain. Bit dodgy here. Why? Because they can more easily force things onto these wallet providers to force them to like track public addresses or add some KYC directly. And you see it here, names of senders and recipients of transactions must be recorded regardless of the amount. So any transaction that you're going to have to do, and we'll see, look, Knut, he comments with the exact right thing, which is the flag of China. I mean, come on. And any transaction that you do on the blockchain, you're going to have to record the names of senders and recipients of these transactions, regardless of the amount. Now, to be fair, there will always be some wallet providers that do not need to follow these rules. And it's quite simple. You can code your own wallet if you want to. This is all open source technology. Anyone can choose to integrate with it however way he prefers to do it. So there will always be a way to escape that. That's number one. And this will be mostly information that concerns exchanges, because if you have an exchange, they have KYC processes. They will have now to be licensed regardless of the exchange, and they can more easily be forced to share this kind of information. And so if you were to do a transfer from a centralized exchange out to a private wallet, well, then you would have to share this information. This is why I recommend to take your Bitcoin out of the exchanges, hold it in your own wallet. This is literally why this technology was invented. This is literally why this technology was invented. I repeat it. It's important. Take your Bitcoin out of the exchanges, because until it's not on your own wallet, it's not your Bitcoin, and anyone will be able to force this kind of stuff later in the future. And it's best if you keep your wallet information to yourself. Now, of course, all of this, I think, you know, this is the kind of regulation that they're trying to push today. This is because they have a flawed understanding of how Bitcoin works and how the blockchain works. And they'll just learn the hard way that what they're trying to do, there's always escape routes, and there's nothing they can do about it. It's just a matter of time for them to realize it, because of course, you know, Bitcoin wins. I mean, nothing stops Bitcoin. At least this won't stop Bitcoin. FBI audit reveals 8,000 unjustified searches of Americans' communications. Man, like, talk about a control world, right? And this control just has to increase, and we're going to see it increase. Look, it's unjustified, yet they did it, and they got the authorization from someone higher up to do it, right? They want to put CBDCs in the market and want to have us use CBDCs. Do you not think control is going to increase? And this kind of abuse is going to be just easier to do, first of all, easier to do, and even more abused. In fact, it will even be an abuse. We're heading towards what China is trying to do with their CBDC and their social credit score. It's not an abuse at that point. It's just what the law says it can be. This kind of unjustified searches, little by little, are becoming the law. And I think that, in the future, what the FBI is going to try and lobby for is for these kind of 8,000 unjustified searches to become the law so that this never does a headline again, right? So watch out for this kind of stuff. This is a strong headline about control. It's just a matter of changing some rules with no one looking at it. And all of a sudden, this is no longer illegal. It is justified just because they changed the rules, putting us little by little more into a state of full control. They say, of course, Americans' communications, the FBI is internal. This kind of stuff happens everywhere. We have to find a solution for our data security and for our, wallet securities. Pakistan to ban cryptocurrencies and says it will never legalize it. Well, first off, it will never legalize it. I think that's literally impossible. And second of all, does it even matter? Again, whether it's legal or not, people can transact using Bitcoin. Whether it's legal or not, people can mine using Bitcoin. So them doing this is just, sending some signals that are useless over the long term. It's interesting to observe. We know that Pakistan, their president has been replaced by, a puppet of the West. It's Majid Nawaz. He's written a lot about that. It's pretty interesting to study. And the West is going against crypto, and they're pushing their influence very easily around the topics of crypto, just like they did with Argentina, with Venezuela through the IMF. Well, again, this is another case of a puppet country that listens to the West because of their rulers and say that they will ban cryptocurrencies and never legalize it. This is just to scare their citizens, and I hope their citizens see straight through it. GDP flippening, I talked about this a bit at the beginning. We see the Brics and the G7, and we basically see how this is going up. And right now, of course, the flippening has happened already, and the forecast is for this to grow. I talked about it earlier at the beginning when it came to energy. These are the producing countries of our world. We need, if we want to be able to remain a power, the G7 has to be able to get back some of this production. I think, there's maybe other ways to innovate, but there's clearly a flippening here, and the leader of this is China. We've also got Russia that is pretty important here. And, China is clearly not the leader of the free world. They are, again, they have their CBDC, they have their social credit score that they're pushing all over the world, and that many different nations want to adopt, including, what is being pushed by the World Economic Forum, leads to the exact same thing. Klaus Schwab literally talks about it, saying that it is a great system and that we should take example of that system. The world is changing. There's this adjustment that is going to happen, and it's just the way it is. I'm not saying it's a bad thing. These countries should develop. I'm all for that. It's just that we should be careful. If we want to keep our free world the way it is, well, then we're going to have to make some changes because we're, being taken over by China. Yellen told bank CEOs more mergers may be necessary, CNN reports. Again, they're seeing the fact that with interest rates staying high or still increasing, there's more banks that are going to fail. Now, it's funny because you see the wording that they're using now. They're calling this bank mergers, yeah? It's not a bank failure or bankruptcy or whatever. No. It's a merger. And that's the trend that we've been seeing for decades, which is that as time passes by, we have less and less small banks, more and more big banks, right? Already now, we have just 3 banks in the US that fail, and that's bigger than all of the banks that failed during the 2007 crisis. Right? And that's because all of these banks that failed, they were basically bought by a bigger bank. A lot of this, tends to be JP Morgan becoming the biggest bank in the world and continuing to be this biggest bank. And so they now call this mergers in order not to scare the public, like talk about, you know, manipulation of words, right? Mergers, what are we talking about? And so she is, you know, talking about this openly to bank CEOs and telling them there will be more mergers, so be prepared for it. But it's all good, because once again, we're going to do just like with First Republic Bank. We're just going to give you free money with 0% interest rate so that you can merge with that company and just essentially buy them out and protect people's funds. Then White House says the stock market will crash by over 45% if US defaults on its debt. Like, that's just similar to what Yellen, you know, of course they're working together in order to avoid a default on the debt. And there's again this topic that like the debt ceiling has to be increased so that the government can take on more debt. This has been accelerating, especially from the, you know, 2007 crisis. White House sending such signals. They just want to show their support for this, but non-stop, let's print more money. That's a bit of an interesting case I found, is that this artificial intelligence image of an explosion near the Pentagon went viral earlier today, with multiple credible and large accounts tweeting it. Over $500 billion was wiped from the S&P 500 in minutes, right? So that's the image itself. It's an AI-generated image, and this is the impact that it had on the stock market. Like, I mean, it is pretty scary. It's interesting to observe. This kind of stuff, of course, accelerates very quickly, right? There's one thing that like triggers a few bots, and all these bots are going to sell up very quickly. This is how these kind of like, you know, flash crashes, I'd say we can call that this way, get triggered. But it's just interesting, you know, it makes you think a lot as to what is the future of our world with AI, where such content is created, you know, through AI, and how it can be manipulated. There has to be a way for us to be able to, you know, confirm or make sure that a certain image comes from a verified account. I don't know, it's an interesting problematic, but AI-generated images can be potentially dangerous to control certain narrative. And controlling narrative is a popular thing. I mean, it happens every time, right? This is how the Vietnam War started, is just through, you know, controlling the narrative. World War I pretty much started like that, with Hitler sending false reports that were published in the Times in London about Poland attacking Germany right before Germany attacked Poland. So, you know, it's the kind of signals that are being used, just fake information, and anyone can produce it and promote this fake information. We already had that before AI. AI kind of makes this easier. Yeah, we'll have to observe, but it is a bit scary to if you think of where else this could apply. Again, Janet Yellen, we expect to be able to pay all of our bills in early June and possibly as soon as June 1st. Again, she wants to increase the debt ceiling, and this is what it's about right here, with the support of the White House. They just need more debt. Again, our system is thirsty and addicted to this debt. Germany falls into recession. I think this is the last of our, exactly. Germany falls into recession. So Germany's first recession since 2020. Economy contracts 0.3% in Q1 2023 after a minus 0.5% fall in previous quarter. It's Europe's largest economy. So, you know, falls in recession again. 2020, of course, was because of COVID, so we don't count it, right? Now we have, again, such poor numbers to be expected. I mean, in fact, you know, if we weren't to count inflation into that, or rather, if we were to count inflation into it, these numbers would be even worse, right? So it's just, yeah, interesting to see. Of course, we're not officially in a recession. No one is going to say this officially, even though this kind of data seems to actually point to that. Anyway, that's it for this video. I hope you enjoyed it. Let me know in the comment section what you thought about it. And yeah, I'll see you in the next one. Keep a lookout on Twitter for the Great Reset. The Great Reset Films Twitter account. You can find me also, Pierre Corbin at Sierra Corbin, just the first two letters of name and surname. I got some exciting stuff I'm working on that I'm planning on releasing in the next few days, including some AI and Bitcoin related elements, a short video as well. So keep an eye out for that, and I'll talk to you very soon. Bye.